Hello, everyone. This is Mohammad Akif with Akif CPA. I am a Texas CPA, also a chartered accountant in Ontario, and today we'll be discussing the RSP and the IRA. It is one of the most common questions that I get in normal consultations and through emails too, and through our leads, is that can I move my RSP or roll over my RSP into an IRA? And then I'll go into detail how this works, and then if it's possible or not. So let's get into it. So technically, when you have RSP, these are all pre-tax income that was contributed into account while you were in Canada. So these are all income that is being earned, put away, pre-taxed into a retirement account that is still growing. So and then what is in IRAs? Similar stuff. Pre-tax income put into a retirement account on the US side. And so technically they both have the same tax status. So can you roll over one tax status, which is in a different country, a Canadian RSP, into a US IRA? The answer is no, because it was pre-tax. You earned it in Canada. So when you do withdraw this money, it will be considered a distribution of those contributions. And then when you are a non-resident of Canada, let's say if you are in this case where you are living in the US and then you're trying to roll over your RSP into IRA, uh, that that contribution will become distribution. There will be tax withholding of 25%. So if you are doing a lump sum withdrawal, there will be a 25% tax withholding. That's the tax-free rate on that withdrawal. And then since you're living in the US, there will be tax on that income because US taxed you on the worldwide income. So if that's the only thing on the Canadian side, let's say that on that year when you are a non-resident and you withdraw RSP, you do have tax withholdings of 25%, and then that's the only form. You will get an NR form at the end of the year by the CRA or by your retirement company. Then you will not have to file a return. If there are other incomes, of course, the reporting is required. But once you do get the form, you will report that income on the U.S. side too. Technically, it is an income. It was pre-tax. As a U.S. resident, you are taxed on the worldwide income. So you will report the tax that you paid on the U.S. side, and then if you need to make contribution, you will make contributions to IRA from that account. But does it make sense? Because you have withdrawn this money, you have paid taxes on it. Does it make sense to put this money into pre-tax account because you already paid tax on it? So the answer again is no. And so this cannot work. The only way this can work is we have some planning opportunities in the year. We have variations of income. In some certain scenarios, this can work, but not in all scenarios. In majority scenarios, it cannot work. So, can you move your RSP, roll over your RSP into a 401k or IRA account? No, and because this was income that was earned in Canada while you were in Canada. And then when you have a distribution, this is called a withdrawal. There is a withholding on it, and then there's a tax on it. So in cases where I would, if this is a lot of amount, then I will let it grow. Again, we'll do some planning to withdraw those amounts, not do a lump sum. So these are a lot of things that we can get into in terms of tax planning. But the simple answer is no. Uh, any questions? Of course, you can reach out to us, and then we'll be gladly able to help you.